Hello, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, October 10th, 2025. David, I'm losing track of months. It's good to see you, buddy. Dialing in from Miami, Ron Quaranta here with my good friend David Brill. Our roving correspondent Josh may be joining us, David. We're not sure. I think she's got Starlink on the yacht now, so we'll have to figure that out. Before we begin, obviously, everyone in the audience, thank you so much for joining us. If you've got questions for David or I, please put them in the chat. We'll review them and try to answer them as quickly as we can. And obviously, please keep in mind, nothing discussed is investment or legal advice. Everything David and I talk about really are our own personal perspectives and not the perspectives or opinions of our respective firms. David, I started the week with a description for you and I and Josh that Uptober keeps going. And of course, as of about 3 or 4 hours ago, that's gone off a cliff. Prices are down. You and I had a busy week speaking at a variety of different events. I think there's a lot of macro stuff to talk about, David, but I wanted your perspectives. And let's talk a little bit about the events and do that if we could quickly. For everyone in the audience, we had the privilege of David Brill and Josh, and shout out to Jason Gottlieb, so many other colleagues that joined us for our conversation with AICPA. It's the AICPA WSBA Blockchain Symposium, which happens in New York City every year. David held court educating people about all things crypto, blockchain, and law and regulation. David, let me please do some quick shout outs. Shout out to Eric Ausgerson, Amy Beers, Sue Coffey, Mike Cerami, Vishal Thacker, all the team over there that really put together, David, I thought an in-depth event. Again, it was for the accounting profession, but lawyers and bankers and technologists. What were your thoughts?
I thought it was an excellent symposium. Look, I think that there's a lot of issues that we deal with on the legal side that also have ramifications on the accounting side. And a lot of it is structuring. And so, a lot of the fundamental things around staking, the treatment of staking, how these, entities get formed and, like the DATCOs and some of the accounting treatment around that. I think those are really interesting issues. And what about you, Ron? I mean, I know you weighed in on and moderated the tokenization panel, which I thought was pretty interesting.
Yeah, it was just so interesting to me, David, I'm going to use the word loosely, the pervasiveness of the conversations and how it impacts different industry verticals. You remember when you and I and Josh did kind of the prior year's overview, where I think it was something like 65 million Americans alone have some access to crypto. And we also brought up the exchange traded products. And we brought up the DATCOs and the treasury companies. So it really is becoming a more and more pervasive part of every industry vertical that you and I know. And look, there's always a bit of the cynic group out there that's like, well, it still feels like this is a Ponzi scheme or this is going away. But the truth is that the attendance was really about what does this mean for our future?
Yeah.
And you and I have spoken about that, about so many different industry groups, banks, legal, accounting, trading, brokerage, and it really is an in-depth conversation. And those nuances and keeping up to date are really important.
Yeah, look, I mean, when I think of some of the clients that we're helping, like I know we are helping, an investment bank. We're helping, a big private company who wants to tokenize assets. So there's a lot of things that companies are doing, looking to do, want to do. And I think, this group was trying to solve some of these issues and talk through some of these issues. I mean, because I think the bottleneck for tokenization right now is really liquidity. And, people want to tokenize things, but who's going to buy it right now? And where, is there a liquid market for it? And, can you sell to non-accredited investors? So there are a lot of interesting issues that we're working through. And, I think we're getting there. I think we're definitely.
David, it's interesting. Yeah, it's interesting that you raised that, mentioning tokenization and the liquidity challenges there. And we've been talking about tokenization for years.
Yeah.
And in the early days, it was, we joked about it this week, tokenize real estate, tokenize, David's Porsche collection, tokenize all of these hard assets. And where we've really seen the out of the gate successes has been in tokenizing broadly financial instruments.
Yeah.
Recognizing the operational efficiencies, the cost efficiencies on behalf of the providers there, But again, to that point of the liquidity, what brings that additional liquidity? Because it's not a technology issue, right? It's a liquidity and market access issue.
Yeah, and it's also a liquidity and like who the ultimate investors are. Like it's great that you have, you just need something. You can't just want to unlock value for the sake of unlocking value. You really need something that people are going to want to buy. So whether it be a revenue stream from renting real estate or something like that, you can't just have like a Class C building at Manhattan and be like, oh, I'd really love to like get some liquidity in here, and I'm just going to tokenize it, and we'll just buy it. So I think in some ways right now, tokenization is early where the quality has to be even maybe a little bit higher because it's novel.
Mm.
And, people really have to buy for a longer term because there's just not that resale market.
Quality in what context, David? Just to be clear for the
Quality of
audience.
underlying assets.
Yeah, right. And who determines that quality metric?
Right.
The value.
Exactly. And like with everything else, it's like, what's it worth? It's worth what somebody's willing to pay for it.
Right.
And so I think though this is, we're seeing a lot of good practical elements filtering in, and I think this needs to grow. But I do think the use case where the banks and other institutions can wring costs out, like the money markets, the tokenized deposits, things like that, I think, we're seeing, obviously good use cases. And look, tokenized deposits, and then, then you sort of start pivoting into stable coins. And even though that's not asset tokenization, it's sort of a different flavor of tokenization.
Yeah, and to that point, David, someone who joined us on Tuesday at the symposium was our good friend Christian Copen from JP Morgan, who was deeply involved in the deposit token release from JPM. So it really is interesting to see the conversations that have evolved. That conversation wouldn't have happened when you and I first started these conversations a decade ago.
Yeah, no, you're absolutely right. And it's taken longer, I think, just because of the regulatory environment. So in some ways, I still feel like there were 4 years where we couldn't really do a lot onshore. So I think everyone is actively making up for that now.
Yeah, David, it's a really good point. And we've definitely got a macro and markets conversation to have. And I read some interesting data today, and I didn't get a chance to text you earlier today or chat long in the green room. But there's definitely some points there I wanted to raise. But we've got to raise something that came up certainly this week, and it's been in the news. We have to talk about the government shutdown a little bit. And again, you and I in these conversations avoid the politics of it, and there are very intransigent perspectives, and it's a difficult series of conversations. What I look at is the knock-on effects of those. There's the human component. People are not getting paid. I think, David, you may know better. On the 15th of this month, the military active duty will not get paid. So these are really difficult conversations. The other outcome, when we look at the world that you and I operate in, is the lack of market and economic data. And I think today we were supposed to get jobs data that we will not get. We're probably getting inflation data, I think, next week. Someone correct me if I'm wrong. But there's been private market participants. And something interesting happened today, David, which is it looks like the employment market, the jobs market, is slowing down. And inflation is not picking up steam, at least in some of the surveys, as badly as some people thought. David, do we need to begin relying on private sources for some of this data? And does the word tariff just blow a hole in any kind of market progress we're making?
Well, look, I mean, ADP does have their data, and the University of Michigan has consumer sentiment, and ADP has their employment data. Look, I think fundamentally, you and I have been talking about this for quite a while, and I think later on other people have started to, speak about it more. But the quality of the data just has to improve. And I just think with all the ways we collect data now, there's got to be a better way to do this. And maybe what comes out of this is that there's a better way we collect data, and then it's not so dated and it's not so reliable. But look, I just think it's really interesting. Like, the government's in a shutdown, but things seem to be running as usual. I don't think people are feeling it. I mean, I'm not, obviously we all want to see government employees be paid. And I mean, I would like to just see a clean CR and that we could just get back and negotiate these other issues. But my hope is, Polymarket said there'd be 2 weeks for a shutdown. So they've been pretty good on things. So benchmark around 2 week point is that hopefully there's some resolution to this and we can all move forward.
That's our friend David Brill looking at the prediction markets out there and gleaning the data, folks. David, the other knock-on effect of some of that as well, and I mentioned the word only half in jest. I think the president this morning, the markets were doing okay a good chunk of the week, generally speaking. I haven't read the details, but apparently it's something along the lines of very extreme or severe tariffs on China, I believe. And then the bottom fell out of at least the crypto market. David, where are we market-wise? I don't have the terminal up, forgive me, and I know you watch options as well. I thought we were potentially looking at a short squeeze. Am I wrong?
It's really funny. This market, it is not easy. The powers that be, whomever they are not making it easy. But, looking at it, it looks like we had sort of like a third time where we broke through the all-time high, and instead of continuing through it, we were selling off.
Yeah.
So basically, not to get too technical, but you kind of look at the amount that's gone up, and we'll say I think we went from 110 to 126.
Mm-hmm. Yep.
So a lot of times, if you don't if you don't see a follow through and it keeps running higher, a lot of times it will sometimes I shouldn't say a lot of times. A lot of times it will retrace 50%. So from 110 to 126, it's very likely that we tag 117 or 118.
Right.
And then ideally, we kind of go from there and then go back and head up for Uptober. But I know a lot of people are frustrated, but this is the third time it's happened where we've, broken through an all-time high and we just haven't held it and we've sold off some. So hopefully fourth time's going to be the charm.
Do you think it's anything like liquidations happening? Like that people have a threshold and they say, oh, if it hits this, then.
I think there's a lot of leverage. And I think what happened is that once we broke through the all-time high, people thought we're we're going to be in price discovery and it just clear skies above. And unfortunately it hasn't happened. And we're really retracing now. And then, with regard to the tariffs, Ron, I think, there is a strategy, an overall strategy that the country has. And it's just, we're taking a different approach regarding communicating that strategy. And so we're just going to see these, peaks and valleys, more intermittently than we would in other times that we've seen this.
Yeah, and to Josh's point, David, we've all seen this. When we hit those highs, it takes some time for the market to find the support level based on some of those transactions. And you're right, we'll leg down 5, 10, 15% sometimes. Josh, I have to ask, David and I were curious, is the Starlink on the yacht not working? Or I'm just curious about how things are treating you, in your cruises.
Yeah, some weeks feel like years.
This is one of those weeks.
This is one of those weeks. Some days feel like years. So this is one of these 24 hours, but all good. And it was so great seeing you guys in person as well.
It was great seeing you as well. We mentioned our friends at AICPA and the WSBA Blockchain Symposium we did with them. I mentioned to the audience that Josh and David and others were holding court. Everyone was asking me how to get in touch with both of you, as well as who was the attorney guy with the T-shirt and jeans. I heard that about 10 different times. We all know our good friend Jason Gottlieb, one of the true scholars in this space. Greg Murphy, I haven't clicked on the link. Morgan Stanley opened crypto access to all client accounts and their retirement plans. David, the wirehouses arriveth.
Yeah, it's kind of about time. I think all of us have been waiting for this. Look, I'm a big believer in that people should have the choice of what they want to invest in, and restricting those choices, I don't think is in the interest of folks. But then it's incumbent on people to do their homework also. So I think it's a two-way street. But I am glad that people are getting the opportunity to do that. And look, I can tell you, I know a number of people who, have said to me oh, I have, these significant amount of 401k. I would love to have maybe 2, 3, 5%, in crypto, but, I don't have that ability right now. And people, you can't even self-direct it a lot of times either.
And that's in the wake of pretty large research organizations saying you should allocate 2, 3, 5%. And that number goes up when you look at later generations. So the axis is something in my mind that's long overdue. Josh, I wanted to pull you in because we were talking about the shutdown a little bit, and David and I kind of dove into the ramifications of that. The other ramification that we spoke about earlier this week was the shutdown of some of the regulators. Except for the bare bones of things like emergency enforcements or something I read about that. A lot of what the three of us look at and members look at, ETPs, for example, all of those are on hold.
Yep.
Yeah.
And I guess my question to you is, how bad is that for this market?
I mean, it's really interesting, right? Because I think one of the amazing things is that now we're looking at this government shutdown as holding back progress, right? Whereas if we went back a year, we would not be thinking that it was holding back progress, perhaps. Yeah. So, yeah, I mean, I think there are a lot of things that people want to get done. For example, like Commissioner Pham's announcement at the end of last month about, tokenized collateral being something to focus on, these sorts of things. Yeah, it would be great to get moving on a lot of this. I think even for the AICPA Wall Street Blockchain Alliance event, I mean, Commissioner Peirce was supposed to be doing a fireside chat, right? So I think in a lot of ways, it would be great to have the government back online. But I mean, the market's going to do its thing, I think.
Yeah. And shout out to Commissioner Peirce and her team. They're a bunch of troopers. Hopefully we get to see them at some future event as well. David, I wanted to throw one more thing out there about this. And it's been a busy week for all of us and for everyone in the audience as well. But I thought I had read, and forgive me if I'm misstating the firm, I thought it was Bitwise, David, has a staking ETP approved. Did either of you see that, or someone in the audience correct me if I'm wrong? Because staking got brought up regularly, David, around the impact of market participants and their accountants and their accounts. And what were your thoughts about that?
I think it was Grayscale, but I'm not.
Grayscale. Yeah, oh, I'm sorry.
Look, it makes a big difference. If the rewards are taxed like when you receive them, or typically staking, you stake for a period of time, and then I think the conventional view is when you unbind the staking, or if you had to stake for a period of time, if that period of time elapsed and you were able to unbind, that's when you could would have to recognize a revenue from the staking. But it's been very complicated. So I think clarity around that is necessary. Look, I mean, the one good thing that's going on is builders keep building. And, it seems like even though Congress has been shut, I saw Senator Lummis put something out again for the de minimis exemption for crypto. And then, although I haven't had a chance to read it at length, I know the Democrats' new proposal regarding market structure came out. And unfortunately, I was reading my former colleague at Voyager, who's now GC at Uniswap Labs, Brian Nisler, pointed out that it was the Democrats' position on DeFi was very unsatisfying from his point of view, and that it hadn't really moved from a previous position that they've held.
Yeah, and David, I haven't read the proposal yet. I did see the news, and I shout out to, I think it was Jake Chervinsky and some others who put comments that basically said, it's so bad it almost seems designed to kill DeFi, and they would have been better off just not even supporting the bill rather than putting this forward, because it will never get that perspective. But it forces us to ask the question, David and Josh, that the three of us have been asking and so many colleagues have been asking, which is, do we get a market structure bill this year? And if we don't, do we ever get a market structure bill?
So, I'm still bullish on a market structure bill, not so much for this year now, but I'm remaining positive. Not sure my crystal ball agrees, but I'm trying to remain positive about it because of the necessity of it. But I do think that perhaps like DeFi doesn't get addressed in a market structure bill, and there's just sort of like a placeholder for DeFi for it to get dealt with in another either iteration or, subsequently to a market structure bill, because I think the gaps right now are really broad based on, the early analysis I've been reading.
Yeah, and for anyone in the audience, if you've done some research, some of our colleagues, let us know. We'd love to get your perspectives on it. Josh, I'm sorry, go ahead.
I was just going to say, one of the things I really appreciated from earlier this week when was a point that Jason was bringing up, Jason Gottlieb, which I think sometimes gets lost, at least in the bubble that I'm in sometimes, which is that because one might think, well, do we need a market structure bill when we have regulators that are now using their powers for good, right? Or that's a joke, but that are using their powers to say, hey, we actually might not need a market structure bill. Maybe we have the authorization, which I think has been Paul Atkin's position. But what Jason brought out into high relief is that we don't have the law. And what we do have in the courts, Ripple having been a split decision, right, where certain of the transactions involved transactions in securities, and other cases like Library and others. So it's not all, if something goes to a court, and of course we still have plaintiffs' lawyers bringing suits and alleging, things that we think the SEC has moved on from. And so I do think that it is important that we that we don't ever, maybe, well, that's a little too strong, but that we don't accept just yet the possibility that we don't get a market structure bill, and just put it all on the regulators, because we've still got plaintiffs.
Yeah. David, Josh, I just want to segue for a moment. Again, shout out to Jason Gottlieb and so many others, John Delalio and Chris Broderson, Joey Wright, so many members and colleagues who participated at the symposium earlier this week. I don't know about either of you, but I think the three of us, when we're doing panels or speeches, maybe we'll take notes, we'll prepare things in advance, just so we kind of level set what we're going to talk about. Jason comes in just off the cuff with an encyclopedic knowledge, doesn't need notes, answers every question. I am truly, truly impressed. I just had to put that out there, David.
Yeah, no, listen, I think Jason has handled a lot of important cases in this space, and it's good to have his perspective, because he's, Josh and I are, we do deals, we handle a lot of regulatory issues. I've certainly overseen my fair share of litigation, but he's, that's his focus, and his perspective is really welcomed and adds value to these conversations we have.
I just had to admit I was impressed by it. David, Josh, we have to go back to one macro thing. And David, I'm sorry I forgot to mention it to you in the green room, so I'm ripping up the script yet again. Everyone's in the marketplace been talking about the it's not the depreciation trade, the debasement trade,
yeah.
Which is essentially, correct me if I'm wrong, David or Josh, it's kind of this perceived devaluation of the dollar. I think it's down 10%. This year causes the flight to, call it alternates, particularly gold over $4,000 an ounce, up until about 2 hours ago with the word tariff, Bitcoin. David, for example, David, is the debasement trade real? And I'm really going to go wonky on us in the face of long-term treasuries. And if you look at the yield curve, it doesn't seem to be that bad in the long term. What are your thoughts?
Well, I mean, look, gold is at an all-time high. Silver is at an all-time high. Crypto is right around an all-time high. And, I think your dollar buys a lot less than it did a few years ago. So I think, I think there's one thing for it to be debased in the US, and it's another thing to be debased as a currency being used in the world. I kind of look at it that way. And yeah, there's a trade here, and I think people are moving to commodities. Look, if you bought gold this year, you're winning. Crypto's having a nice year. Stock market's having a nice year, but I mean, we do have to be mindful. Our debt keeps going up, and the dollar's buying less. And I think if you don't own hard assets, you're feeling inflation, and the value of your dollar is less.
Yeah. And David, to that point, to get a little macro on it again, is I think for the first time ever, the interest on our debt just hit $1 trillion, just in interest.
Yeah.
And for the gold, people looking at gold and saying, wow, gold has done really, really well. Remember, those gold holders of the past 15 years suffered with almost no return, didn't move because we had essentially a zero interest rate, low inflation environment. So David, again, a lot of the macro stuff that we certainly spend a lot of time looking at. I know we've got a relatively short amount of time. Josh, David, it's a busy week. Shout out to all of our colleagues working on the WSBA's October 23rd event in New York City. You'll see Josh, you'll see David, you'll see Jason again, you'll see so many other colleagues in the space. With the shutdown going on, Josh, what are we focused on in the coming week from a legislative or regulatory perspective or a legal perspective? I would love your thoughts.
So, I mean, I think there's a lot of stuff out there already, like the Treasury's request for input about the rules around Genius. I think a number of people a lot of people hopefully are looking to respond to that and certainly analyzing. I think I think with the leaked market structure piece, I think, a lot of people have feelings. So yeah, I mean, I think there's a lot of stuff with that. I just think as a practical matter, this is an extremely busy time. I don't think that any projects that I am involved with or talking to or companies that are looking into this space have seemed the least bit phased about the government shutdown. It is really like all systems go, it feels like. I do have a question for you guys, though. And it relates back to the staking, right? So my understanding is that Grayscale's ETH and Solana ETFs are both implementing staking. So when we think broadly about what effects this may have, I know we don't give investment advice, but just on price, right? I think often we've been thinking about how much more the funds will make by being able to stake. I'm wondering, what is the effect on the overall availability, free flow of these digital assets in the event that more are staked? So I know some of the blockchains have certain equilibrium built in, right, where the rewards decrease or increase based on the percentage staked. But I'm just wondering, have you guys given any thought to this, or from an economic perspective on,
I mean, it's very dependent on which digital asset we're talking about, and I haven't. Thank you for the weekend assignment, because now I have to think about it. Yeah, I haven't dove too deeply into it. David, I mean, forgets this stuff more than I will ever know it. David, what are your thoughts?
I think it really depends on that digital asset, like you said, but also like how much of it is actually in those funds actually being bought. I think, until you really get to some kind of critical mass, I think a question is like, what is the NAV for a digital asset that's being staked? So, so for instance, if ETH's trading at I think it was around 4,100, when we started today, and they're, and that ETP or ETF is staking, do you have to add 2.5% to the NAV? Is that what the NAV is? And I think that's an interesting question. And the other thing interesting is how are the staking rewards given to shareholders? Because I really think if you could own a digital asset and also get a rate of return 2, 3, 4%, that's very attractive to a whole other set of investors. Somebody who might want to get a little bit, want some more upside, but still getting sort of like a fixed income stream. So I think that's a really interesting question. But no, Josh, I think that has to get to real critical mass before it starts moving the dial on it.
Well, so another question, and no pressure to have these answers. I mean, I certainly don't know them.
Yeah.
But for example, say you are a fund manager and you have an ETF and you are staking. How much of the digital assets do you stake? Do you stake it all? Because, there could be an unbonding period, right? And then you have less flexibility with respect to, I don't know, how you pivot in and out. So I'm just curious, do you have any thoughts about
Well, most funds have covenants around how much they can hold certain things. I imagine some of the staking funds, David, would covenant how much they can stake of the fund itself. I don't know what those parameters might be, but funds generally have some of those parameters built out. But David, correct me if you disagree.
No, I agree. But also I think that to maintain liquidity, they certainly couldn't, stake it all. And how long are they staked for? Is it something that you could unstake in a weekend? Is it something you could unstake at any time? Or is it something that's staked for a longer period of time? My sense is it has to be short term, like staking that could be, almost instantaneously unbound. Because otherwise, if there was a lot of sales of one of the funds, I don't know how they would, account for that.
Yeah, they have to plan for redemptions, right?
Yeah.
They have to have that capability of having that liquidity for clients who do redeem or sell out. Josh just gave us additional homework, David.
I'm sorry.
As if we don't have enough to do. Well, David, Josh, we're gonna come up on time. I know it's been a short session today. Again, looking forward to seeing you both again, hopefully sometime next week, and certainly on this live stream. Week after that, we're all in New York City, especially hanging around for the cocktail reception at the end. David, Josh, what are you spending the next few days doing?
Traveling. So I will be headed to DC for DC FinTech Week, and it'll be quite interesting because government's closed, but I think there's going to be a lot of important people at DC FinTech Week, and I'm really looking forward to the 2 days of discussions and to see people down in the DC area. So I'm going to be doing that. And then I'm going to be headed to the Association of Corporate Council's annual event in Philadelphia. So I'm going to be spending a lot of time in the Northeast, and hopefully I can bring some warm weather up with me.
43 degrees when I woke up this morning. Josh, what about you?
I am likely to be working. But also, apart from that, I believe that there is I've been spending a lot of time at my beach house when not in the office. And it appears that I got an alert that there will be a major coastal flood watch tomorrow through Monday.
I got the alert. There's a lot of rain and wind coming our way, David. So hold up in the beach compound, my friend. You'll be okay.
Yeah, I'm trying to think of what I need to move off of the floor downstairs. So.
These are some first world problems.
Yeah, seriously.
Yes.
Or as a friend of my wife would say, real hole in the yacht problem you got there, Ron. Well, Josh, exactly. David, I likewise will be doing work and research, plus the planning for the event continues.
Yes.
I am so looking forward. But David, Josh, we're going to leave it there. For everyone in the audience, thank you so much for joining us. If you had questions that we missed, drop us a note, info@wsba.co, and we will take it from there. Looking forward to seeing you all next week. Have a great weekend, everyone. Bye-bye.